Sticking with China, its stock market is soaring after the country's central bank made a big move to revive the economy. The CSI 300 seeing its biggest jump in 4 years after the People's Bank of China revealed and unveiled its latest round of stimulus for the first time since the pandemic. Yahoo Finance's markets editor, Jared Blikre, he's standing by and tracking all the moves for us this morning. I'm just waiting for an international heat map to pop up, Jared. Oh, please don't disappoint.
There we go. Come on, guys. You're going to notice something jump out, maybe. We got 4% moves in not only Hong Kong, but also China. Let me show you their benchmark, the CSI 300. This is what happened today. They announced the stimulus measures, took a minute to take off. Here you go. There's a lunch hour, and boom, right after the lunch hour, more gains, and then into the close, up 4%. That is the best day for the index in 4 years. I'll give you a visual on some of the stocks in China right now. Nice smattering, Alibaba up 2%, Pinduoduo up 2%, JD up 4%, but not really big movements in some of these big stocks that we're used to seeing. I want to go over some of the details. These are key. There's a lot in this package right now. And I'm going to go over a lot of terms. Some of them are going to seem strange, but it's basically all monetary stimulus. There's not any fiscal stimulus that I see in this package, and we'll get to that point in a bit. But first, I want to go over the details. The 7-day repurchase rate, that's basically a week-long loan, going to be lowered to 1.5% from 1.7%. That RRR is lowered by the reverse requirement ratio. That is how much banks have to post in reserve in order to make loans. That's going to be lowered by 0.5 point. That should unleash 1 trillion yuan in liquidity. The People's Bank of China not telling us when those reverse repo cuts are going to take effect. Then we have a slightly longer lending facility. That's going to be cut by 0.3 percentage points. We have the minimum down payment ratio for second home buyers. That's going to be cut to 15% from 25%. So they're stimulating their property sector, which has been under tremendous pressure recently, and over the last few years for that matter. And it looks like China may cut the reverse repo rate further this year by another 25.5 percentage points. And that will not apply to small banks, just the larger ones. And then the loan prime rate and deposit rates, those are shorter term interest rates. Those fall by 0.2 to 0.25 percentage points. And then finally, the PBOC is going to cover 100% of loans for local governments buying unsold homes with cheap funding, up from 60%. So that was a measure that was already in place, and we're seeing them tack on to that. I do want to quote Macquarie here. We do have a quote from Macquarie. The purpose of today's briefing is to inject confidence into the market, judging by the fact that the authorities revealed measures in one go. That was all at once. The stimulus push will still need coordination from other policies, particularly follow-up policies from the fiscal side. And that's what I was noting before. There's no fiscal measures in here, but if they do come, that would be kind of the complement. That would be the magic sauce that got us the boost in the pandemic. Now, the risk, of course, is that there's too much stimulus. And we've seen that before. We've seen this with the People's Bank of China many times. Let me go back to our charts here, and I'll show you the historical on the CSI 300. Here we go. The People's Bank of China at various times have tried to revive their economy through monetary stimulus, and it has backfired. They have only weakened their economy, inflated asset bubbles, so they need to figure out the asset side, the fiscal side as well. Here's China once again. I want to show you the 5-year chart. They're down 34%. So the country is in dire straits with respect to their economy, and this is kind of a last-ditch effort, I think, on their behalf to bring them into the fold. I'll add one more point. The drop in percentage points in the U.S. a week or two ago, that gives the other central banks across the world a little bit of wiggle room to do things like that, like this. So that was very important. Guys.